Good day, everybody, and welcome to another exciting episode of Rolling in Crypto. Glad you could join us again today. First, let me start off with what this channel is about so you don't waste your time. We are a community that works together on investing in crypto and NFTs. I don't deal with the NFTs. That's Brian, who has other videos on our channel as well. But if you're interested in NFTs, please check out his videos on NFTs. I usually deal with more beginner crypto investors. So, and the disclaimer is this is not financial advice. This is for entertainment and educational purposes only, and I'm not a financial advisor. So please do your own research or speak with the financial advisor, which if you can find one who's advising you on crypto, good luck. Most financial advisors really don't know anything about crypto. That's why they've been poo-pooing it for 10 years. And now they're starting to get on board. And that's kind of what our episode is going to be about today, is all of the good news surrounding crypto. Now, for those of you who have been in crypto for the last 2 months, it has been mostly doom and gloom. And luckily, the past day has been a nice uptrend in cryptocurrency. My portfolio is probably up about 15%. If you've been watching for a while, you'll notice that crypto tokens and currencies mostly move in tandem with Bitcoin and Ethereum. If they go up, generally everything else kind of goes up, maybe not at the same percentage rate, but usually they go up. And if Bitcoin goes down, it generally drags everything down with it. And of course, there's always outliers and exceptions to that, but it is generally the case as for right now, because Bitcoin is the big dog on the block and Ethereum is the next one. So just reading through news articles and stuff like that, and there is a lot of good news concerning crypto. And I think, our position, or at least my position is, I do some speculation trading. I'll buy and then sell, but that requires a lot of timing of the market. And to time the market is very difficult, especially with crypto, because there's very few fundamentals to go on. Very few. I mean, you can, there's, you're rolling the dice when you're trying to time the market with crypto. You can play the trends, but it's always easy to go in hindsight. Oh man, if I would have just sold, on January the 1st, I could have bought it back on February the 1st at a much better price. Well, would you have bought on February the 1st? Did you know that February the 1st was going to be the turning point? No, you didn't know. It could keep going down. So unless you really have the time to watch the market, with Crypto 101, we're using Coinbase and Robinhood, so we can't put in stop limit orders. And I have found, even if I can put stop limit order, when I do put stop limit orders in, they tend to get triggered at times where I really don't want them. It'll be a quick dip, and I will my coins will sell, and then the price goes right back up immediately. You can't put in limit orders on Robinhood and limit orders on Coinbase Pro, but we haven't even gotten into Coinbase Pro yet. So I'm just talking from what we've gone so far in Crypto 101. But that said, let's go and look at some of the news and some of the good news for crypto markets. So let's take a look here. I'll just start right here. Wall Street's latest crypto moves. So this is all good sign. Wall Street remains bullish on crypto amid market turbulence. The world's largest firms are pursuing crypto-adjacent ETFs. ETFs, for those of you who are new to investing, is an electronically traded fund. So if you know what a mutual fund is, a mutual fund is a basket of stocks. And all those stocks together make up the value of that fund. And the fund, you can buy it during the day, and the price adjusts every night after the market closes. So you only get one price change once a day. With electronically traded funds, it is still a basket of stocks, or in this case will be a basket of coins that you can trade like one individual stock or one individual coin. And what that does is that gives you greater diversity in your basket, so that you're not all of your eggs aren't on one coin. So if that one coin for some reason gets hacked or whatever the bad news could be, could drive that one coin out of the market, you don't get totally ruined. Same thing if you were in a stock, for example, in a technology ETF, you would probably hold Microsoft, Facebook, Netflix, Apple. And as you've noticed, or if you follow stocks, Facebook went down 25% on Friday. Now, if you had all of your money in Facebook, that means you lost 25% of your value in one day. But because you were in the ETF, you probably only lost about 3% of your value. So having the larger group protects you from those big market swings like that. Will Facebook come back? Well, they're not doing so good with Meta, but hey, good luck to them. I have some money in Facebook, so hopefully they'll do better. Market continues to struggle, but global finance giants are doubling down on crypto. This is such good news for all of us, because when these big financial institutions get involved and start buying massive amounts of these coins, including Bitcoin, they've got to go into altcoins. There really isn't enough coins out there for these big guys to get into, because they're going to be buying billions of dollars worth of coins. I know their investors are clamoring for them to get involved with it. I talked with some stockbrokers. UBS is still, saying they're not getting involved with individual coins, but they do believe that their customers and clients should be in blockchain technology. So ETFs, and then there are some stocks that deal with blockchain technology. So, in a roundabout way, they're investing in crypto, but they're not investing in crypto tokens or coins. Close your eyes and imagine 2022's ultimate diamond hands hodler. That means if you've been holding and holding, you're probably not picturing a Wall Street trader rocking complete fleece and staring into bank monitors and Bloomberg terminals. But during this rocky moment, as crypto markets have shed more than $1 trillion from November's highs, and everybody who's out there, we're always preaching to hodl. This happens time and time again in the crypto market. It does this. And the people who make out really well are the people who dollar cost average in. That means they're buying during those dips, and they get to reap the benefits when this comes back up, and it will come back up, and it's going to come back in a vengeance. I suspect that we're going to see all-time highs in crypto in 2022, barring some type of catastrophic event. Hopefully nothing happens over in Ukraine. But institutional money is doubling down. Traditional banks are staffing up on crypto researchers, while they're hiring all these. Anybody who's a crypto researcher is being hired right now. So hey, if you're looking for a great job, learn crypto. Follow our site. Please like, join, and subscribe, and share your information with us. But man, this is a great time to be applying for jobs for crypto researchers, because who are you competing against? There aren't that many of them. While asset managed giants like BlackRock and Fidelity are ramping up crypto-related ETFs. So once again, they're bringing these products to market so that their clients can get into coins, because their clients are like, what are we doing? Why are we missing out on this stuff? It's $3 trillion. Well, 2 trillion now, since we lost $1 trillion in the last few months, but they have no choice. I could just understand, if I didn't know how to invest in crypto, especially if I didn't want to take the time, but I'm already in a brokerage, I would be calling my brokerage and being like, why aren't we investing in crypto? Why aren't you at least giving me the choice to invest in crypto? So that's what's going on. One of the biggest concerns is, with the Fed rates going up. Here's the thing about the Fed rates. Yes, they may go up, but they're still at historic lows. I don't understand why everybody's so freaked out that we're going to go from 0 to 0.25 on an interest rate. That's not going to kill the economy, believe me. Probably March is when they're going to go up. Last week's meeting with the Federal Reserve, but we still have little clarity on how many rate hikes we might see in 2022. I've been hearing 3. Once again, we'll probably still be way below historical lows. So, you can still borrow money cheap, and that's good for everything that we want. Investment firms like Credit Suisse, Jefferies, and Canaccord Genuity are hiring crypto analysts to boost their research divisions, and I believe I believe somebody big from Facebook just left, that was dealing with their crypto and has gone to another company. I don't know the details on that. Let me try to find it. If anybody wants to know, I'll look it up. Put a video in my next video. The latest sign that crypto is becoming more integrated and correlated with the broader market, and that's what we want. I mean, you are on. If you're investing right now, you are on the bottom floor of something that is going to be huge. These companies all manage trillions of dollars, trillions of dollars. Wisdom Tree alone manages 76 billion, and they plan to launch a digital asset wallet called Wisdom Tree Prime. This is huge. Robinhood, as I told you, is working on their wallet, and I believe it is in beta right now. Users will be able to buy crypto, even tokenized versions of physical assets like gold. Now, that's going to be interesting. I can't wait to read more on that. Demand for crypto from the firm's customers is clearly ample. Between the end of 2020 and the end of 2021, Wisdom Tree more than quintupled its crypto assets under management. Quintupled. Went from 79 million to 406 million, 5 times in a span of 1 year. That's impressive. That's impressive. Now, and you know who Kathy Woods is? She's been buying Bitcoin like crazy. One major question continues to loom on Wall Street: when spot ETFs, exchange traded funds, are hugely popular asset class, which we talked about earlier, that generally track the price of an asset like gold or a basket of assets like the S&P 500. As their name suggests, they trade on exchanges and can be bought and sold like stock via traditional brokerage account. We've already gone over this. Last year, ETFs holding Bitcoin futures contracts launched to record-breaking success momentarily. It's not, if you've invested in Bito, B-I-T-O, you haven't made much money. Crypto ETFs, on the other hand, would hold crypto directly. So the Bito is actually dealing with futures. These new ones that are coming are going to hold a basket of coins. And for me, it's simple. It's like the NASDAQ 100. Let's just have the crypto 20. We hold the top 20 coins, or the crypto 100. I don't invest in anything below 20. Occasionally I do, but it's got to have some promising upside to it before I give my money to any of these beginner coins. There's 20,000 of them now, and there's new ones being created every day. So they got to have some impressive money behind them. I want to see who's investing in them. I want to see what their plan is, and I want to see them achieve their objectives before I'm giving them any money. And usually by then it's too late. Fidelity, BlackRock, BNY Mellon, Charles Schwab, which collectively manage assets worth $20 trillion, have recently announced intentions to pursue crypto ETFs. Now, these are the smartest money people in the world, and you've beat them to the punch. You already own crypto. They've been poo-pooing it for years because they didn't know what to do. They didn't have anybody there who knew how to invest in crypto. Well, guess what? That's why they're hiring these analysts. Fidelity, which unsuccessfully filed for spot BTC Bitcoin ETF approval, is now pursuing an alternate strategy. It recently submitted a pair of new crypto-focused ETFs for SEC approval. Fingers crossed that those get approved. I would love a crypto ETF. I would love it because I only deal with the top 20. I would love to get some speculation going on, but without losing every penny of it in an overnight problem that one coin has, or they get hacked or whatever it is. There's too much volatility just to speculate in these single coins that are new. At least for me, that's my opinion. All this is just my opinion. You may do your own research. If you want to invest in new coins, by all means, do so. Obstacles to further institutional crypto adoption remain. Both BNY Mellon and Charles Schwab have cited a murky rulemaking environment as a reason they haven't developed deeper into space. So what it is they don't want to put a lot of work into this only to have the SEC, shut them down. In a recent tweet, the SEC Commissioner Hester Pierce criticized her agency for denying Bitcoin and ETF applications while continuing to allow Bitcoin futures and ETFs. The rationale underlying the denials doesn't get any better with time. So yeah, why are they turning them down? There's crazier stuff in the market than investing in crypto, which already has a $2 trillion value in it and is accepted worldwide. Crypto is in every country. You know why? Because all you need is a connection to the internet, and you can be investing in crypto. You can beat all of these fund managers to the punch now. So you have a window of opportunity to get in before what I believe is going to be a boon in crypto, because when these guys start buying billions of dollars at a time in these coins, they have no option but to go up. And they're not going to be buying these coins that have no track record. At least I don't think so. But maybe there will be some ETFs for speculation. There's the OTC market for stocks, pink sheets. That's very speculative, penny stocks. So maybe, who knows? But I guess we'll find out. In a new report, Fidelity said that Bitcoin has the potential to become the primary monetary good. Now, this is Fidelity. They're huge. A major endorsement from a firm with more than $4 trillion to its name. $4 trillion to its name is saying that Bitcoin may become the primary monetary good. An institutional investor appears to be shrugging off the fact that Bitcoin is down more than 40%. Well, Facebook is down 25%. Do you think everybody's going, oh, Facebook is dead, it'll never, ever be around again? It's a scam. No, they're not. Indeed, some analysts note that the vast amount of institutional money currently invested in crypto may act as a steadying force, potentially making this downturn different from past dips. And that's what I'm saying. As more money comes in, you're not going to get these massive turn downs just, because right now, one person can affect the crypto market. One whale can affect the crypto market. And when it gets much larger, one whale cannot affect the crypto market. They may be able to affect one coin slightly, but they are not going to drive the market down 40%. We won't really go into more about what Ethereum's doing. All I really wanted to do was share good news with you, and Ethereum's always good news. I got something here in glasses. $8 trillion, the amount that the metaverse, the virtual and augmented reality in which we may all be doing much of our living, working, playing in the future will someday be worth, according to Goldman Sachs, $8 trillion. It's hard for me to get my mind around the metaverse. I'm an outdoors person, so I don't spend my time online or in virtual reality, except for when I'm here with you guys, sharing information. But I can absolutely see it. And my thoughts are, especially with things like concerts, and with the pandemic, you have created an avatar, you buy a seat at a concert, you have your virtual reality glasses on, and, other people have bought tickets around you. And if it's your friend's avatars beside you, you can see them. Hey, if Justin Bieber his avatar happens to be at this concert, you're like, oh, there he is in the front row. You'll actually buy tickets, so you'll have a better view of the stage. All the possibilities are almost endless. And I understand, like when if you go to a virtual mall and, and people are buying real estate in these virtual malls and these sandbox and these virtual realities, having good real estate in there is important. If you're out on the periphery of the mall, how those stores are, they don't do very well. So it's just a great time to be investing in some stuff. To just think back, Amazon, it's not even 20 years old. Apple, not even 20 years old. Google, not even 20 years old. You are getting in on the ground floor of this stuff, possibly before it becomes the next big thing. And like I said, we don't invest any money that we can't afford to lose. Do not put your mortgage payment into crypto, no matter what I say, no matter what you find in your research, no matter what anybody else says. Only put in what you can afford to lose, that if it goes completely to zero today, it does not change your life. But put some money in so that you can take advantage, because, you know, a little bit of money could be a big thing 20 years from now. So that's my opinion. 2.5 billion amount that payments giants Visa says customers spending using crypto linked cards, including the Coinbase card. I use the Coinbase card. In its first fiscal quarter, 2.5 billion. So $2.5 billion worth of crypto has been used in 3 months. That's crazy. It's crazy. I mean, this is exciting. You know, like I say, go look at all our videos, get some ideas from us, go do your research on it. You know, there's plenty of, that's the problem with the crypto market. Well, I shouldn't say it's a problem, but there is so much information out there that it is hard to glean through what is real and what is not. So that's why we have this community, to help each other, to learn things, to help filter through some of this stuff, to bring you, you know, relative information that is going to help you, relevant information that is going to help you make decisions and, you know, make an educated decision on which coins you should buy. Like I say, I always pick in the top 20. I look to see if they have, you know, a good market cap. I like it to be in the billions, or at least close to $1 billion. I like to see that more people are buying it than selling it. I like to look at how long they're holding it. If people are only holding a matter of days, that's volatile to me. I like people that are holding for, you know, 40, 50, 60, 70 days, the average hold time, because that means people are hodling it. You know, so much Bitcoin is being taken out of exchanges because people just aren't selling. They're not keeping their money in the exchange when they're not selling. So the price is down, they're holding. Well, guess what? You'll see that money go back into the exchanges when it gets up again. Well, that is all I really want to share with you today. I thank everybody for stopping by. Remember, this is just my opinion. This is just information. Do your own research, and you too will be rolling in crypto.